Hey traders, welcome to Charts and Coffee. Great to have you here. Happy Thursday, everyone. Happy CPI Thursday, everyone. We've been talking about this inflation data here for a couple days. In fact, we had some great videos right back at the Simpler Trading YouTube channel. I believe Bruce and Neil both had some great takes on this. And what have we been waiting for? Well, I'm going to show you something here as we kick off our show that we've had content on before. If you're in the mastery, if you're in the options room, if you're in the futures room, you see me head on over to this site right here, the CME Fed Watch tool. And what we want to see, and wow, does this change the picture? Let me show you something here. This is something that I was preparing for this morning to show everyone, but I'm going to show you this right now. This is the contrast. This is huge. All right, take a look at this. These were the March Fed meeting probabilities before the CPI. 75% likelihood of a quarter point hike, 25% of that 50 basis point hike, right? So that double quarter. That was really not even discussed a couple weeks ago. We had a column, very small, that was showing less than 10% chance of a hold in March. So by far, the expectations were for a quarter point hike. That was before 8:30 a.m. Eastern. Take a look at this now. This is now neck and neck, right? 55%. Why did that 25 quarter point hike column shrink the way that it did? Because now the Fed Fund futures are saying, hey, we cannot rule out that this half point hike is nearly as likely. And why would that be? Well, look, when we head on over to Forex Factory, this is the calendar that I recommend. Most people keep an eye on. It's a good global economic calendar. You take a look at that number. Is CPI hot? Right? That's what we've got going on right now. So what do we know about this uptick in CPI? Higher than the previous, 0.2 higher than expected. This paves the way for the Federal Reserve to not only hike in March, but maybe as reflected by the Fed Fund futures, hike a half point. We don't know what they're going to do. We're trying to determine as traders what are likely scenarios. That's what discounting is. That's what baked into the cake means. So this is where we sit. Now, of course, what are the markets going to think about this? Yeah, they're going to kind of hate it. Now, if you're in if you were in any of the rooms, any of the rooms, mastery, futures, options, this is a setup that I have been talking about in two flavors, two varieties. One is the more economical XLY put, which you can see right now is pre-market down at 186.25, and the other was the more expensive but equally trend following QQQ put, right? Beautiful move to the downside. This is a bearish momentum, bearish trend market, right? So any discussion of buying dips can't occur here, right? Any discussion, and actually, for those of you in the futures room, I talked about the toppy oversold S&P and Dow as well. Look, I'm not saying I knew this was going to happen. All I was saying is as we moved higher in an overall bearish psychology, an overall bearish trend like we have in the Qs or the XLY or the XLC or the SM matrix, any of these what we call double red downtrends, right? If you've got grab candles, which by the way, you can go grab over at Countdown Trader, you know we have well beyond our 8 to 10 red grab candles in a row that indicate that this is getting way more bearish than bullish. Anywhere that you can go grab or see the red grab candles in that succession, you've got very likely a bearish market. If you don't have the tools, again, I like to remind everybody, because I don't want to talk about tools that are so basic, so needed, so foundational to what I talk about with you all each and every morning, unaccessible. You don't have to buy these. Head on over to countdowntrader.com. Whatever style of trading you're doing now, this will supplement it. All right. Because it's not about where you're getting in and where you're getting out. It's about why should you think about being bullish or bearish? Why should you look at resistance as a short as opposed to resistance as a breakout level? Right. So it will, there's not much I can say will move the needle for you, but grab candles and the wave will make a huge, huge difference. All right. So that's what we've got going on. I hope you can see the importance of these target rate probabilities. This is the way you do macro, gang. This is the way you understand macroeconomics on a rate of change. What's the rate of change of the reflection of the target rate probabilities, right? So I hope that helps. And it's something you can do off a free site, right? Can we see if the trend is going higher or lower? That's how simple macroeconomics, true, easy, useful, tactical macroeconomics can be. All right, so this show, of course, is all about your questions. I wanted to make sure I covered that CPI, not that it was 2/10 better. I mean, really, who cares? Where's the reaction? Why is the market selling off the way it did? That is a dramatic change in expectation, gang, for the potential of a 0.5 point hike. That's big stuff. That's big stuff. And it's measurable. All right. It's measurable. So let's get to it. First question. Hey there, Cindy. In sector secrets, how big an account size do you need? Do I call out entries and exits? So in sector secrets, and this is what I do in my own account. My husband does this as well. He trades. I know a lot of you like to know, hey, how is he trading? Yeah, he's been trading on and off again. Cash account. I do not use a margin account because we go long calls, long puts. Okay, number 2, how big? Well, I don't want anyone to think that you need a huge account. I think somewhere in the vicinity of 5,000 is pretty good. Are there ways to trade with less capital? Yeah, of course, right? If you want to trade some of our, like for example, we had and still have been looking at the UUP, all right, for a long trade, which we're going to see UUP head back up higher. These options are 25, 30 cents, right? So it doesn't matter the account size. You would just use multiples of these very inexpensive options. Recently, we got into Ford, which was also very inexpensive. My focus is usually options that cost $4, $5 or less. Do we get into more expensive options? Yes, we got into some XLY puts. We're in IWM puts. Those were a little on the pricier side, but we focus on cash account trading. So no pattern day trading rule, and what you're buying your options for, calls or puts, plus commission, is the extent of your risk. That's the way I like to trade. And do I call out entries and exits? I send out alerts. Yes, I send out alerts. Not when I'm getting in and out, which is really, frankly, not that helpful to you. What I'm looking at and what price at which I want to get in and get out. Okay, hope that helps. All right. Was there a video last night? Michael, it was, I'm not sure what video for what. There was a video in the futures room. Of course, we have the free videos at the YouTube channel. So let me know. I'm not sure. We have all sorts of videos that we keep an eye on here that we update for you here at Simpler. And we're cranking out content that's timely and hopefully tactical for you all each and every day. All right, Google, sure. So I think I mentioned a video that I cut on Feb 1 on the heels. Actually, no, before the move higher. And I said, look, if Google's earnings catapult the market higher, we could look at the previous resistance of the Darvis, resistance, and that would be a zone for a short sell. That would be a fade of the strength. Now, I mentioned yesterday when someone asked, I said, look, we're at the halfway mark. Take your profit, pay yourself, scale out of half the position. So at half, pay yourself for half. And then now, we're in the middle of the range. There's nothing that I want to really do here in the middle of the range in a choppy market. So Google, shorter term time frame for some folks. I need another setup, preferably at the edge of the range. As far as Tesla goes, Tesla's far more bearish than it is bullish. Do we have the prerequisite red grab candles, absolutely. Would I be looking at a short? I think there are probably better shorts um, around the narrative of of Tesla. XLY would be one of them. So Tesla is part of the XLY, as is Home Depot, as is Amazon. So for me, it's not how can I trade Tesla? It's really for me, why would I want to trade Tesla? Is there, from an outperformance standpoint, a better short that could be taken? And there are other far better shorts. That's what we took yesterday. Shorts in the IWM, QQQ, XLY. So anytime for me, I'm looking at an individual symbol, I make it earn its spot in my book of trades. I make it show to me that in whatever capacity I'm looking for the setup, that it is the best example that I've got at the time with some proximity, meaning, it's close to being triggered. It's close to being actionable, right? So for me, Tesla's a short. I've got that prerequisite number of grab candles. But one of the great proxies for Tesla would be to go with the XLY, especially if you think that Amazon is going to move lower, especially if you think Home Depot is going to continue to move lower, right? Because now you can trade the tide and not necessarily one of the individual boats. So I'm bearish. Tesla, I have to be really, if I'm convinced that I want to be looking at the XLY to the short side. What about some UUP targets? I would say the first target is going to be this point of control, 2570, risk on 2570. All right. Could Facebook have bottomed? Well, in a very, very aggressive way, Facebook has established a minor low pattern reversal. That's super aggressive. However, I will not trade a minor low swing. And this is a building block of my Darvis 2.0 tool, right? So if you've got the free version, the 2.0 version, you are looking at these minor lows and minor highs. That's what's creating these levels, the resistance and the support. Now, I'm typically not going to look for bottoms in a market that is bearish, right? Not only is Facebook bearish, but the ETF that it is heavily weighted within, not only QQQ, but XLC. Take a look. Facebook is bearish momentum, bearish trend, red over red. XLC is bearish momentum, bearish trend, red over red. This is not a place that I'm looking for a buy, my friend. Not yet. What do I need to see? I need to see it goes neutral. I don't need to see it go significantly higher, but I need to see that the red, literally the bleeding, is slowing. We're not there yet. We're not there yet at all. For me. Hey there, Kathy. Can I take a look at XM, of course? My question is, which analysis to use when a stock is moving from red to yellow, as is the case here? All right, so XM, what I would do here, right? So this is kind of also going back to Jimmy's question. What am I looking for in a transitional market? So you have the red, 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 and we start to go yellow. Lower low, swing high, retracement. This is kind of a quick 1, 2, 3, but it's a 1, 2, 3. So quick, it's a little quicker than I'd like, but this is a 1, 2, 3 pattern. And what do I mean by that? Well, we have the movement lower, right? We have the confirmation of the red going to a slightly more neutral environment. But I will say that's fine. This is where the 1, 2, 3, and this is a 1, 2, 3 reversal. That would be a 1, 2, 3 reversal on this chart. And then as it takes out the resistance of that swing high, which is almost always going to have the Darvis 2.0 confirmation, that is a momentum breakout. I don't love momentum trades, but 1, 2, 3, threes are momentum setups. And there's your 1, there's your 2, there's your 3, there's your required neutral environment on XM to confirm that this does indeed have a shot at reversing. And then a couple of the things that I like to do, I might confirm it with a CCI that's at least at a reading of 100, things like that. Okay. that is a 1-2-3 reversal. And that's exactly what we're seeing. I think that's the setup that I would focus on. It's a wave reversal. It's a 1-2-3 reversal. CCI confirmation would be fantastic. All right. So can we take a look at, hey there, Melissa, WSM for an overbought overshort, an overbought short rally buy under 200. It's right at the 200 right now, top of the wave. Previous trend was bearish. So yes, the thing that's going to be interesting about Williams-Sonoma is you see this consolidation that we're seeing right now. Very blue, very neutral string of candles here, just at the 200. It's coiling, right? It's coiling. Yes, I agree with you. My expectation would be for a move back to the downside. I would also look at the tide, ITB, XHB, that Williams-Sonoma tends to track with, right? So this is your boat. Here's your tide. I would say that the closer that I could trigger an entry to that 200, the 200 propulsion, the happier I would be right in there. That's your 200. The more we can enter it near that level, the lower the cost, the lower the risk, because if we get above it, right? If it's propelled above it, we could keep a pretty tight leash on those puts and keep risk pretty low. Keep cost low because, obviously we're entering right near the validity of the conservative part of the entry. And on the other side of that is the point of validity for the trade itself. So that's what I would look at there on that, Melissa. So great question. D-Dog, Furman, D-Dog, sure. Double yellow. I love that everyone's got this lingo down. Gosh, that makes me so happy. But what is it? It's not secret language. It's not technobabble. We're just using color to express the status, the state of the momentum and the trend. Yellow is neutral, red is bearish, green is bullish. And we're using the 8, 13, 21, and 34 exponential moving averages to do that. So love it. Gap down after hours on earnings. Now, I don't play earnings, Furman. So what I'll do is I'll look at as the dust settles in this post-hot zone, earning hot zone environment. This is not necessarily going to be tethered to the broader averages. I can't say that I love the clarity here. It's more neutral, but it's more neutral, frankly, and arguably overbought as we end up closing in on this line here, which is the point of control. That's a volume derived level, and that would be resistance. So, maybe look at the halfway mark of the current range, but I don't really have a high probability setup on this gap. I just don't, it's not going to necessarily track with the broader market. So it could very well do its own thing. So I don't have a setup at the moment. Let me see what happens after the open, but I like to let the dust settle after earnings. And then maybe later today, tomorrow, I can see if there's a setup in the wake of that volatility. Clearly a gap up volatility, which you can see here. There's your resistance. But remember, once you get into a hot zone, the secret squiggles, the price levels, all that takes a back seat to the volatility of the earnings. So that's why I do not like to play earnings themselves. I'll play into earnings, I'll play after earnings, but I will not play through earnings personally. All right, so that is that. My thoughts on ASAN, sure. Short the rip. Short the rip. Call want, downtrend, short the rip. I don't know anything about ASAN. I would keep an eye on news and whatnot, but, in the tide that it's involved in, but short the rip. Absolutely. UNG, sure, Natty Gas. So Natty is sitting lower than I would like, no doubt about it. I'm going to continue to monitor where the support is waiting for us in natural gas. We will likely look at some conservative level entries around a gap close in this area. I'm not giving up on Natty. I just know it's chop. And I should expect a little bit of this volatility. One of the reasons Natty Gas is kind of an easier ETF to trade. And the way we do it's a little bit easier is we separate between agro entries where we're using a smaller percentage of our budget so that if we get down to a more conservative area, right, more conservative area, we still have some of our budget and we can still look to enter. Not a priority symbol. I did and do like the setup, but it's not, frankly, it's not doing what I want it to do. So this is where I have to know where my paper cuts are. This is where I have to say, Rog, are you wrong? Look, none of us like losing on a trade. And I'll tell you, on this side of the mic and on this side of the camera, it's even more interesting because there's an ego component, right? A lot of folks don't like to say, hey, I was wrong. Gang, I might be wrong here. I absolutely might be wrong here, which is why we have paper cut stop losses. When we're wrong, it's not personal. It's not emotional. Take the losses while they're small. Get that capital back in your account. And don't necessarily look back at getting into UNG. We might look at other opportunities. In fact, my general rule is I am not allowed to re-enter a market that I was completely stopped out of for fear of just being a revenge trader, right? Okay, gang, that is my time with you all today. Thank you as always. Caffeinate and dominate, gang. It's going to be an interesting session. Be good to each other. I'll see you tomorrow. If you have any questions, if you have any other requests on topics or whatnot, leave them in the comments. Smash that like button for me on the way out. Let us know that this show is helping you all, and let us know that this is something that's a great way to get your day started. I know it is for me. I'm grateful for your time. I'll see you tomorrow.